Hi guys, my name is Roger Samuel and today I'm starting a new YouTube channel called Roxanne Invest. And today I want to talk about the psychology of investing. Now, you may not realize that investing is all about your mindset, what's up here. I'm not saying that earnings and financial analysis is not important, but I'm saying is you need to keep in mind that investing is about a meeting of willing buyers and sellers, and all of them have got their preconception and also their expectations about the future. Psychology is the reason behind stock market bubbles and also the crashes. So let's flash back to the year 1999 when S&P 500 price to earnings ratio was 32 times. And NASDAQ was obscenely high as well. There was a lot of unprofitable tech companies, and to the extent that some traditional companies actually put the domain name .com to the company name just to get a high valuation for their stock. The classic example was Pets.com. It was just a traditional company selling pet supplies. But then the valuation in its heyday was $400 million in market cap. It has never made any money. It's burning cash, and it spent like $1.2 million on a 30-second Super Bowl ads, and the company went bankrupt in late 2000. Now let's look at the recent times in 2020 to 2021 during the COVID lockdown, when the stock market also was obscenely high as well in terms of the valuation multiple. And that's because of the low interest rates environment and also the stimulus checks from the governments. Now, some of the tech companies were valued on price to sales ratio and on earnings ratio. And you may remember back in the 2000 .com crash, it was the same thing. But then people tried to rationalize that this time it was different. No, it wasn't different. What happened back in the year 2000 happened again in 2020 and 2021. Now, let's look at what the stock market is doing right now. It's down 20% so far this year. Now, people are talking about the potential recession and also inflation. Where did it come from? Where are the recession? We're not in the recession yet, but people talk about it, and the more we talk about it, it becomes a self-fulfilling prophecy. So what should we do then? How can we overcome our biases? What we know is that timing the market is not a good strategy. It's all about time in market that gives you a better return. Now, research has shown that over a 120-year period, the Dow Jones actually generated a positive return 52% of its trading days, but in terms of months, it is 58% of the time, and over a year, it was 66%. Now, if you can wait for 3 years, it is 73% of the time, and over a 10-year period, it was 82%, with an average gain of 107% and average losses of just 16%. So, don't lose faith in the market. If you sell now during a market downturn, you will just crystallize your losses. Stay invested. That's all from me today. Make sure you click on the subscribe button and like this video. Thank you very much.